Welcome to TradeTheNBI.com. This is John. This report is for the 16th. Well, we had our, little dip back down, came back to the lows right from this previous open on the last dip, and bounced off it a little on positive comments. We had the short-term buyers just come back a little bit. It's enough to sustain things. We really weren't seeing a drop in the DOC red yet, so from all typical expressions, you would have what would be a compressed double bottom. But if this shoots back up, of course, we got to get back over 29 to clear that 50% level. So right now, okay, I still think that you're in a modestly bearish situation. It certainly has opportunities if you want to attack weakness, but certainly got to wait for it, because when you have these kind of pop-ups, even on the 50K, if we put the 50K up, once we had the decline, we had improving shakeout coming through, and then we started rising with gold. We would have expected more of a move out of this, but then it kind of softened out, but started back up again. And so took the entries right there, a little late with it, and then got out, but then right back into it before the actual turnaround taking place. Of course, we have falling Morganacci highs, so we would expect to try to get up towards that 89 or see which one reaches, price will reach the 100% first, or whether the Morganacci's will drop to where the current level is. So either way, we're going to be getting price moving to that 100% level very quickly here. And I think that's just part of the volatility of where we're at right now. I don't consider this out of the norm, especially when you have lower overall volume in general. Sometimes you can create these big events, and when you do, that just multiplies the volume dramatically. It's a lot more work coming back on, so we would expect that from this down bar, somewhere in that 50% range, which is almost where the old 50% was, would be reasonable, which is just shy of the 29. It would have been, somewhere in the 85-ish range. So that's generally where you can look for things at this particular point. I think it gives us a broad perspective. You can see the improvement of the NASDAQ in relation, though, because it's already still at the 50% with rising lows at this particular point. So we'll be looking for any weakness. This has had the green over cyan for some time from a bullish standpoint. So even despite the big sell-off in that, it was still broader bullish compared to what we were seeing on the S&P. And this will be worrisome to the U.S. because even with their intervention, they're split all over the place because of the demand for weakness. Of course, you had all these, interesting recession is here comments about the U.S., which is just crazy given what we're seeing from the growth numbers. But the EU, no, it's a disaster. And we've been talking about it for some time, and that we've been over 110 has been crazy in the first place, but that's all right. That Fed has been doing a very good job at holding that. It's going to be critical for them here, because if it starts to break down, you could see subpar given the dislocation between where the U.S. is, but coupled with rates. Now, that assumes that the U.S. doesn't ease further, which everyone expects it to, but that doesn't necessarily translate into actually done, because the Fed has been at odds with where Trump wants to take things. And it's one of those where always leading up to an election, the Fed is sort of the silent vote, because depending on what they do will have a dramatic impact. If they soften now, that would certainly guarantee there's not going to be a recession going into the election. And if they hold firm, then it's just a question of whether or not things sustain themselves. I certainly don't see them tightening more, but if they do internal tightening with their balance sheet, that would certainly have the same effect. I mean, we already saw they went too far with it before, and with the early raising of rates really crimped growth, which could have been substantially higher. Plus, it skyrocketed the deficits with the interest charges. And oil, just holding its own, and we're not expecting oil to be anything special, but it's critical that we're seeing this, because it's indicating that despite all the gloom and doom talk, there's still enough demand to maintain this level. So as long as that exists and you don't have an oversupply, something's off with the rhetoric compared to the realities. Gold continuing to rise. This again is that whole debate of fiat currencies and this whole debt ballooning and what's going to have to happen as far as more economic quantitative easing around the world kind of situation. And this is going to be the safe haven. Cryptocurrencies to a little bit lesser degree. They still have not come full around. This is what it looked like. Well, at this particular point, we started from a nice little buy down at the 28.30 here. Once we got way over the 13.5s on the bounce coming up. Even for me, waiting for the break of the 13.5 with the red still would have put you right at the 23%. Compared to the orange, which gets you down at 28.22 was the orange, and right at the 23% right there was at 32, so 10 points higher. But as you can see, from 28.32, we're all the way at 28.77. So it's a pretty good sized move, and that's pretty much corresponds to what we saw from the 50K. So. Literally almost identified it from its bottom point right there, and that's impressive. It was pretty straightforward action. We just had a lot of up and down. There were plenty of DOC spread readings. The red DOC couldn't get over 0 in most of this, so from my standpoint it seemed mostly bearish until right at this particular point we got right there, and then boom, DOC spread breaks below the 0 point. It had the reset. I thought, okay, maybe that's going to create something, and boom, it came to it right here. We had green over, so the potential for a new bounce up was strong, and then an immediate spider with steel going below caused me to have to flip that around, and that led to the nice dip taking place there. And this was, this is one of those interesting ones because this looked good, went long, ended up being a loss, but that's okay because we're able to see the transition pretty darn quick, and it still led to a significant number of points. I mean, we went from 47 down to under 30 into the 22 range. So I mean, it was 20 plus points. Weren't fighting to the downside. So that's the long and the short of it. Pretty exciting summer so far. Can't say that it's all that troubling or anything. I think we're doing just fine as the readings go. So we're sort of in an odd daily setup with the bouncing back and forth, but in general, we still have the DOC that's above the negative 13. So potential positive move there. If I see a bigger separation of cyan greater than green or something like that, that would cause me to be more concerned, or having that steel cross below cyan to really trigger the end of this little up crossover, even though we've seen pretty big moves either direction. We're really just kind of generally in the same spot we were when we got the buy signal, which was right back here at this 50%. We're just like fractionally below it. As always though, I will update anything on the Skype chat. Trade well.